Welcome back. You're watching us here on Halftime Report. Important news at the bottom of your screen with regards to the inclusion of natural gas under GST. But this is our special segment, which is Value Plus. We focus on the tyre stocks, which have been the driving force in today's trading session when it comes to a sectoral move on the back of price hikes that have come in. Let's focus on a lot of individual stocks which are, buzzing around on account of this price hike. And then we talk about the commodity itself. Sonia joins in with the price hike update, the latest one being MRF.
Absolutely. Thanks a lot for that. So, if you look at it, there has been a price hike across the board for most of these tyre companies. And the one that we're looking at this afternoon is MRF. MRF has announced a price increase effective 18 July. Truck tyres have been hiked by approximately 2%. Passenger car and radial tyres prices have been hiked by in the range of 3 to 7%. So far, there's been no hike in two-wheeler tyre prices, but the blended price increase works out to be about 2%. Now, this is the first price increase that MRF has taken in order to pass on the higher raw material costs to consumers, specifically rubber and crude that is used in the manufacturing of tyres. Now, if you look at it, the other players like Apollo, CEat, JK Tyres have already taken approximately 3% price increases, and the price increases still lag the cost increases that have been seen in the last 3 to 4 months. So, despite the prices being passed on to consumers, there could still be some margin pressure that the companies face because of higher rubber and crude oil prices. So, overall, yes, it's a positive for MRF. The fact that demand is strong enough that they were able to pass on the price increases to customers. Back to you.
All right, that explains the up move on these stocks. And like Sonia pointed out, one of the key reasons for this price hike is the increase in rubber prices itself. And if you're watching this show on a regular basis, you would not be surprised by that, largely because Manisha has been telling us about the increase in rubber prices and the fundamental reasons for the same as well. Manisha joins us to apprise us once again of the happenings in the rubber industry. Manisha.
Well, thank you for that, Mangalam. Yes, if you look at the rubber prices, this is after a very long time that we have seen prices run up above 200 rupees a kg. This is the highest in 13 years. And that is because in the previous season itself, we've had heat waves. So the production has been lower. Productivity has been a concern as well. And then you clearly have to look at the global markets as well, where the rubber study group says that for the year 2024, while the consumption will increase by 3.1%, the production will increase only by 1.1%. So globally as well, we are looking at very bullish trends when it comes to rubber. For the Indian markets also, while the production and consumption mismatch continues, remember, India does depend on the international market for anywhere between 4 to 5 million tons of rubber that we do import here. And the demand has been quite strong from the tyre sector, as Sonia was pointing out, and from the non-tyre sector as well. The rubber product exports have been on the stronger side as well. The only concern that the industry really sees is the 25% import duty on rubber. But apart from that, the kind of demand growth that we are seeing in case of rubber on a quarter-on-quarter basis, year-on-year basis has been much on the higher side. So that tells you that the rubber prices are here to stay above 200 and can even see further gains from here on.
All right, Manisha, thanks a lot for that. So that's about the rubber prices. In fact, like we said, last week we had this conversation. Manisha was speaking with Rajiv Budhraja, who's the General Director at Automotive Tyre Manufacturers Association, or ATMA as we know it, when he spoke about companies which are concerned about their rubber availability, even as at elevated prices, domestic rubber is just not available. So not only are the prices higher, there is not elevated prices. So what's the outlook for this industry, this commodity itself? Let's hear out those comments.
Near record high, having crossed 200 and now, hovering around 205 and 6 mark. That itself is, from the consumer perspective, a point of concern. But I think more than that, it's availability, that is become a major concern for the tyre companies. Even at these prices, domestic rubber is not available. And there is hardly any visibility seen, going forward also for multiple reasons. So at this point of time, both price and its domestic availability are the two major concerns for the tyre industry.
All right, so the tyre industry in focus. Tyre stocks are higher because the companies have gone ahead and taken price hikes. Important to see whether these price hikes will actually aid their margin or just mitigate the increase in their cost itself? And would there be an impact on demand on account of these price hikes? In any case, the current quarter that we're in, the monsoon quarter, does not see elevated demand for tires. How that pans out in terms of an up move for their EBITDA and EPS is something we'll watch out for. But that's about the tire space value plus segment. Take a short break, come back on the other side. Manisha still with us, speaking about all things commodities, and she has with her Kunal Shah of Nirmal Bang.